What is the best way to use funds from my S-Corp to pay my taxes? Since the corporation taxes flow through my personal taxes, I understand I need to pay my personal taxes from my personal account, but the money is really in my business account. Can I use a distribution, and is there a dollar amount limit for such a transaction? What say you, Jeff?
Yeah, you can always distribute your basis in the company. And I'll keep it even simpler than that. I make $100,000 in my S corporation. That's $100,000 that could come to me. Now, if you're profitable and distributing money, you really need to pay some kind of salary. And we talk sometimes about the 1 out of 3.
Yeah.
Well, where $1 of distribution or total distribution should go to salary, and the other 2/3 can go to you. But yeah, it's fairly simple. Now, I want to get your feeling on something else that I've seen done. Is they're talking specifically about personal income taxes. How do you feel about the S corporation making those payments?
I'm really fine with it. If the S, so here's how it works. S-Corp, the net profit or the net losses flow onto your personal tax return, whether the money's in the corp or not. Now, if the corporation pays a bill for you, your accountant's going to say that's a distribution.
Yeah.
So whether it goes to you first and then you pay it, or it just pays it on your behalf, it's going to be a journal entry.
Mm-hmm.
It's going to be, how does the accountant classify that? As long as you classify it as a distribution, you're fine. As Jeff said, if you take distributions of profit out of an S-Corp, this is really important concept. I'm going to perk up your CPA ears, anybody out here who's a tax professional, because the IRS will tells us the answer. If you make a profit and you take distributions, you have a salary requirement. If you have losses and you take distributions, you're not distributing net profit. You do not. You're just returning capital, in which case it does not require a salary. It's kind of weird. If you just have an S-Corp that makes net profit and you do not take a distribution, technically you do not have to take a salary. But if you pay the taxes that are owed and you need the money from the S-Corp, it's a distribution no matter what, whether you pay it directly to the IRS or whether they pay it to you. So then you would trigger that salary requirement. And as Jeff said, most of the courts say it's a 1/3 rule. I would say that it goes lower and lower the higher you go. You're making $1 million, you could probably get away with paying yourself $250,000, right? It's whatever reasonable salary is for your whatever services. But if you're making 100,000, you better make sure you're paying at least 1/3, 33,000 right, in wages. But I get it. It's sitting in that business account, and you're like, gosh, but I just want it. There is no limit. If the thing makes 10 million bucks, you could take 10 million bucks out. In fact, I would encourage it, because that business, chances are it has liability that you don't.
Are you saying leaving that $10 million paints a target on that S corporation?
Yeah, we just had that. We literally had a client with about 10 million bucks sitting in an S-Corp. They get sued and they're like, crap, we have so much cash in here. And they're like, it's a voidable transaction. It's a fraudulent conveyance, whatever you want to call it, but it's a uniform voidable transaction. I think is the new rules that they're putting out there. Most states are adopting. And all they say is, hey, you owe the money.
Mm-hmm.
You know you owe the money. Can't transfer the money now. So what you do is, if you make the 10 million, get it out of the business, put it in an LLC in Wyoming where nobody can see it, nobody can touch it. It's not taxable, comes to you, puts out there. Those are both tax-free transactions. And that way nobody can get to that money. I run into a busload of nuns, money's protected. Business gets sued, protected. Business gets nuked and they come after me individually, I still have that money protected. But if I leave it in the company, boom, they're going to end up hitting that. Or if I do something individually, they can still take my company. So you kind of look at it and go, shoot, how do I minimize that risk? And again, not to beat our own.
But Toby, if I take all $10 million out and I decide I want to buy some equipment or something,
I can just put the money back in.
Oh, wow, look at that.
It's magic. It's like I can put money in my business and I can take it out. Put it in, take it out. Put it in, take it out. It's like the hokey pokey. Just remember the hokey pokey. Now, it's a little different if it's a C Corp. If it is a C Corp or an LLC tax as a C Corp, it's not quite that simple, because the C Corp is a separate taxpayer.
We should talk before you do this.
Yeah. If it's a C Corp, talk to your accountant. You could still do so. Like you could have a line of credit. You could say, hey, I need cash periodically, but it's the corporation that's going to hold the paper. What if I want to get it out of the corporation and get it into my protected anonymous LLC somewhere? Okay, you're going to be paying corporate tax and you're going to be paying a dividend. So, you know, you just got to do these things with your eyes open. Anything else on the S-Corp?
Nope.
All right. Hey guys, if you like this snippet of Tax Tuesday, then I invite you to click the link and actually subscribe to become a Tax Tuesday member. Every other week, we do these live, and you too can ask your questions, and myself and my team will answer your questions on the next Tax Tuesday.